Let's speak about Meta, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be looking through pretty much everything that you could want to from Meta's most recent presentation. We have quite a few things to go through. We're going to be going through the entirety of the earnings, and I'm going to try to let you guys know pretty much everything that there is to know. We're also going to be having a look at some of the ratios, the price to earnings ratio, price to sales, price to book, all of them. And some of them may well surprise you. We're obviously going to be having a little bit of a look at the stock chart, seeing how things have gone in recent times. We're going to be taking a look at institutional ownership, institutional inflow and outflow into Meta over the last few months and over the last 12 months in particular, and what the analysts have to say in general. Hopefully, by the time you've watched this video through, you'll have a very good understanding of what has happened with Meta over the last quarter. You'll have a good understanding of what's happening, why these earnings were perhaps a little bit underwhelming to a lot of people, some of the good, some of the bad, where the money is going, and why it may well be a good time to purchase Meta for the long term, and why I personally am considering adding to my position in them for the first time in quite a while. I do not want to waste anyone's precious time. Really quick though, can I please ask you to hit that juicy like button, drop me a comment down below and subscribe if you're new around here. All of that helps me and the channel out so much, and it's going to keep me motivated to keep up with the daily videos, baby. But first things first, we're going to take a look at the second quarter 2022 financial highlights. Now, I've gone through everything and I've tried to highlight a lot of the highlights so that you don't have to go through all of the boring stuff, okay? But first things first, 2022 financial highlights. Total revenue, okay? 28,822 million compared to 2021, down 1%. So right off the bat, total revenue, nothing crazy. You know, obviously it's down a little bit, 3 months ended June 30th, but it is not in any way terrible. We look at total costs and expenses, and that is what a lot of today's video is going to come down to. It's going to come down to where Meta's money is going. It's going to come down to, can they sustain it for a considerable period of time? A lot of it comes down to the metaverse. It comes down to a lot of research and development, a lot of marketing as well. There's a lot of advertising things going on, but cost and expenses up 22%, 3 months ended June 30th. Now, when you're looking at stocks, this cannot be seen as a good or bad thing objectively. You have to see why those costs and expenses are going up. If it's because of reasons like funding future growth, happy days. If it's because of share buybacks, you know, that can well be happy days. If money's just being wasted, if it's not being put to good use, then there is reason to be upset. But that is not what we are going to find out in today's video. Now, aside from that, you can also see income from operations are down 32% for the 3 months ended. It's a huge loss. You'll see a lot of that is coming down to advertising reasons, which we will get into, of course. And the operating margin as well has come down considerably to 29% from 43%. So, all in all, you know, if that's the first thing you see when you open up this earnings report, doesn't look very good at all. In fact, it looks very bad. I haven't even highlighted anything here in regards to the operational and other financial highlights because we're going to go through the entirety of it just really quickly. So, family daily active people was up 4% year over year to 2.88 billion on average for June 2022. Look, guys, simply put, Facebook is still growing. The amount of people using the service on a daily, weekly, monthly basis is still growing. Family monthly active people was up 4% as well. Daily active users, 1.97 billion people on average using Facebook daily, up 3% year over year. And monthly active users at 2.93 billion, up 1% year over year. So, around every metric in regards to people actually using the platform that is Meta, juicy. They're all going up, considering the fact that they're nearing 3 billion monthly active users and they are still seeing continual growth. That is fantastic, no matter what way you try to string it. Obviously, growth is slowing down in regards to active users. It has to. There's only so many people in the world. The fact that quarter in, quarter out, we are still seeing growth, in my opinion, personally, is huge. So this is one thing I would always look for when I'm looking at Meta's earnings. And yes, it's looking very good. Now, huge thing, absolutely huge thing. Ad impressions and price per ad. The second quarter of 2022, ad impressions delivered across our family of apps increased by 15% year over year. And the average price per ad decreased by 14% year over year. Now, why is this happening and how can this be fixed? Because we see Google, Alphabet doing better with ads, a lot better than we seem to see Facebook doing here with the price per ad going down so much. We want to see this number get fixed. Obviously, impressions going up, very good. Advertisers are going to be very happy, but we need to see those costs going up, in my personal opinion. Especially if Facebook want to pump so much money into research and development. They have to keep on top of cash flows, which we will get into very shortly, okay? Capital expenditures, including principal payments on finance leases, We're 7.75 billion for the second quarter. We'll get into exactly where that's coming from. An awesome one here, share repurchases. They repurchased 5.08 billion of their Class A common stock in the second quarter of 2022. Beautiful. They currently have 24.32 billion available and authorized for repurchases. Now, me personally, always very happy to see this. We'll take a look at the diluted share pool later on as well. You'll see what kind of an impact this has and how it's actually going to make the prices of our shares ultimately go up in the long term, the scarcity of the shares. But I think this will have to slow down considering how much money they are pumping into research and development right now and how that is not going to slow down for a considerable period of time, upwards of years more than likely. And also when we see the average revenue per user right now, the fact that it's been going down in the majority of the world, this is more than likely going to have to slow down. But for this quarter in particular, that's good. And it goes to show that Meta still believes in the company and they love their own company at this price. When it's already beaten up over 50%, they're willing to go out and buy more of these shares. It's something that you always love to see. Share buybacks are always good. It's one reason that people absolutely love Apple. They're always buying back their shares every single quarter, pretty much without fail. Now, if we get into a little bit of the nitty-gritty, we look at the condensed, consolidated statements of income. Revenue, we already went through. It's pretty much where it was the year ago, okay? Research and development, what I've been speaking about quite a bit already. We can see at 8.69 billion compared to just over 6 billion, okay? A huge increase in money going into research and development. And you'll see the same thing for the 6 month ended June 30 as we do for the 3 months ended. Huge money being pumped into research and development. And this cannot be ignored. And that's why, we have to take everything we're going to see on these balance sheets with a little pinch of salt. We really have to focus on the current assets, the cash that we have, the money that we are taking in, the operating margins. That's why people are disappointed. A lot of those things are going down. But we also have to look at where that money is going. G&A as well, we can see huge increases of over 50% for the 3 months ended, going up massively. Total costs and expenses, again, up nearly 25% for those 3 months ended. And you'll see income from operations down pretty much 50% for the 3 months ended. So you can see why people are disappointed with these numbers right off the bat. It's quite simple. And again, with net income down huge for the 3 months ended and the 6 months ended. It's not looking like this is going to end anytime soon either. That's why I think a lot of people are going to be relatively slow to load the boat with Meta. But when we get to some of the ratios later on, the price to earnings, the price to free cash flow, a lot of those things, you'll see it is at some of the best valuations it has literally ever been at. I'm not speaking 2020, 2021 levels, even back before 2019. And again, we can see the weighted average shares used to complete earnings per share. They bought back, as we just spoke about, which, we should be very happy to see. Because again, the less shares that are out there, the more ours are ultimately going to become worth. Now, really quickly, just to show you guys how well of a position they are still in cash-wise, asset-wise, okay? Current assets, 55.9 billion. Total assets, 169.7 billion. Total liabilities are currently at 44 billion, okay? So, Facebook has always had an absolutely immaculate balance sheet, and it is still the case. People have to understand they can afford to pump money into research and development, general administrative, marketing, whatever it is right now. They have so much money, okay? Now, if we do look at the current assets, you'll see that a lot of it isn't made up from the cash and equivalents as of this moment in time, and they are going down. Total assets have gone up since year over year, but yeah, pretty much we're still in a beautiful position. The current liabilities are only at 22 billion. I mean, they can cover them very, very easily. We do not need to worry about that whatsoever. Meta's balance sheet is still as beautiful as it has always been, and it is the primary reason that people should not be concerned with the amount of future-proof Meta are doing right now. This is one of those stocks that the more you start to look into it, the more you realize that's exactly what they are doing. They are future-proofing. They are innovating. They are looking forward. They are not becoming complacent with just Facebook. They're not just trying to increase ad revenues. They're trying to keep moving forward, which is what has to be done to keep up, good revenue growth in the long term. You can't just keep the same product forever and expect the company to grow. If you want to find a good investment, you have to find someone who's going to keep expanding and making their business better and better and better. So for me, I'm really loving everything I see. I know it may sound silly. I know a lot of people are bearish short term right now. Short term, I don't have a clue what Meta's going to do. I'm looking at it with a long term perspective. Now we're going to take a look at some of the cash flows, okay? Now obviously there's quite a lot that you could go through here, and it's going to go through some of the more important ones in my opinion. Obviously you can go and look through everything in full yourself if you want to. But net cash provided by operating activities. Again, not down too much 3 months ended year over year, okay? 12.1 bill compared to 13.2. And the 6 months ended is actually higher than the year prior. So net cash, not looking bad whatsoever. Okay, purchase of property and equipment. Again, you can see these numbers getting bigger and bigger and bigger. And again, this all comes down to that research and development, that general administrative. This money is being invested into the company. So although it's in brackets and it is technically a minus, for the long term, this is going to turn into a lot more money, a lot more cash flow. Cash flows from financing activities, so taxes paid. More importantly, repurchase of common A stock, which we already spoke about. You'll see that they've purchased more the 6 months ended June 30th this year than they did 2021 when they were up at much higher prices, even though they're pumping more money into their own company. You see what I mean, guys? The team over at Meta very clearly do believe in themselves right now. And the institutions do too when we look at what the analysts are saying and when we look at the cash flows into Meta stock as opposed to the cash flows out. There is a quite clear general consensus on what Meta is going to do in the coming 12 months. Now here you can just get a little bit more of a clearer picture instead of having to read through all those little numbers, segment results in millions. So total revenue, okay? We can see that Q2 2022 has been one of the worst quarters when it comes to revenue since the end of 2020, which obviously isn't what people are going to see. We can also see that Realty Labs revenue is down, which again is not what people want to see, especially with all of this research and development going on. We can see that the family of apps is actually staying up. So if Realty Labs does begin to catch up, we're going to see a very good revenue, the kind of revenue that could then lead to beating expectations, which could lead to an easy 10-15% pop in Meta's price. It's happened before, even with these huge mega cap stocks. And one more thing I'd like to point out quickly is the operating margin, okay, the lowest it's been in quite a considerable period of time. But again, guys, that comes down to everything we've already spoken about inside of this video. Family of apps operating income, again, is lower despite the revenue being quite good. The actual operating income is coming down that little bit lower. But again, nothing to panic about. And if the same quarter has a similar result, nothing to worry about. If the next 3 quarters have a similar result, not very much to worry about with the long-term outlook. As long as you're not throwing all of your money into this stock all at once, not much to worry about. Advertising revenue by geography. So this one's quite an interesting one when we do actually take a bit of a look at it. US and Canada, these bottom numbers. You can see it's down considerably from the peaks of 21. I don't really think it's fair to compare Meta or Alphabet or any major advertiser to their mid to late 2021 prices. What we can do is go back towards the end of 2020, even the start of 2021, and we'll see that, you know, they're still considerably higher than where they once were, okay? Now, we can also see Europe, a similar trend to US and Canada. It's down considerably since the end of 21. It's up a little bit since 2022. A relatively interesting one here is Asia Pacific, up again. The numbers are rising quite rapidly. This is a huge market that we would like to see them taking over more of. Their average revenue from user in these places is still quite low as well. So if they can increase that number, then this is going to go off the charts. And again, it's another huge potential catalyst for Meta down the line in the years to come. As somebody who works on YouTube and gets paid by Alphabet, I can see how much you get paid per 1,000 views based on a place's country. And you get a lot more in general for Europe, for the US, for Canada than you do for places in the rest of the world, in Asia Pacific regions. And if those countries can be monetized a little bit better down the line, that's an immediate boost in revenue. It could be an immediate 1, 2, 3% boost in revenue in the span of a couple of months. It doesn't take that long. I'll just move my camera for a second. Here is one that really shows everything we've been saying today. CapEx. I mean, look at the size of the bar chart. Never even mind the numbers. You can see how much CapEx is going into the business right now. And again, it's something I am actually happy to see. And it is the primary thing to look for, in my personal opinion, one of the primary things to look for the next few earnings periods going forward with Meta. But that CapEx has gone up huge year to date and Q2 in general. And then just to expand again on expenses as a percentage of revenue again, the facts are right here. Research and development. Look at the numbers, okay? Expenses as a percentage of revenue, 28%. 30% for Q2 2022. I mean, that's 50% higher than most of the other quarters, pretty much. Marketing and sales, similar story, you know what I mean? It's still up, staying around right where it was, but you can see where that money is going. It is being pumped into research and development. And again, guys, I just want to remind you, look at any of the biggest companies in the world. They are innovators. They have always invested in the next product. Look at Tesla. Look at Ford even, for example. Look at Apple. Look at all of these guys who have constantly come out with new products, constantly pumped money. into their own businesses. That is what we are seeing with Meta right now. And that's why, me personally, maybe I'm being a little bit too optimistic, but I don't think this quarter was as bad as a lot of people are making it out to be. And I don't think a lot of the real analysts are either. I've seen one or two analysts bring their price targets down for Meta after the earnings, but I've also seen a few put their price targets up. Before we get into that, I want to just show you guys some ratios here for Meta, okay? So first things, we'll take a look at the PE ratio. It's currently at 12. 12, okay? When we were buying this stock in 2021, 24, 25, 27, it's at 12, okay? That is very low. Price to sales is a similar situation. Look at this. A price to sales of 3.77 for Meta. It has been coming down for quite a while, but wow. I mean, that's not something I think we're going to see too many times in the future. Price to book ratio as well. Look at that. At a 3.51. So much lower than historically average. Price to free cash flow, again, this one's pretty crazy, 11.28. I mean, it's half, if not a third of where it is an awful lot of the time. The ratios speak for themselves as of right now, okay? When we do take a look at analyst recommendations, a lot of these, I'm sure, won't be updated after the most recent quarterly reporting as it was only yesterday, but you can still see, okay? 47 analysts offering 12-month price targets. Median price target represents a 35% increase, low 6.3%, and high 226%. If you just focus on that median for the 12-month outlook, I mean, where do you get to buy a mega stock and look at 35.8% growth? I know we're in this crazy time, inflation, blah, blah, blah. This more than likely isn't going to happen, but still, the outlook is there. Again, you can go see the analysts that changed price targets today. I found one that went up to, I think it was $196. One brought them down to, I think it was the low 150s. The facts speak for themselves, okay? Nearly everyone is saying buy or hold on Meta. Only one analyst saying underperform. We look at the institutional ownership for Meta, okay? Total institutional inflows in the last 12 months are at $57.27 billion. Outflows last 12 months at $48.95 billion. Even last quarter, there was $5 billion more worth of inflow than there was outflow into Meta. Sorry, Q4 of last year. The last quarter, there was more sold than bought, and I reckon Q2 is going to be the exact same. We'll find out relatively soon. But there is no doubt in my mind that relatively soon we are going to start seeing much more inflows than outflows into Meta yet again. And it still has 65% institutional ownerships. There are still much more institutional buyers than there are sellers. The big money quite clearly sees Meta going one direction, and it is not downwards in the long term. And again, the lower it gets, the better that the ratios get, the more we're going to see that cash inflow right into Meta stock. It's pretty much guaranteed. Now, we look at the stock chart, and this is why, you know, I'm not screaming buy, go all in, blah, blah, blah just yet. I do want to remind you guys, look, the lows of March 2020 were at about $140. We are not far away from there whatsoever. And look at how far Meta has come since then. I mean, it's insane. There is also this obvious huge gap. Let's be honest, guys. Do you really think Meta's never going to fill this gap? No, it represents huge upside as it stands here today. But it's in an extraordinarily clear downtrend. I don't think you need to go pay a professional analyst to tell you that this is a stonk that is going down, okay? I don't think you need me to tell you even. It could very, very, very easily find its way back to these levels. Who knows? It could even go down a little bit lower. It's just the way it is. That's why, to me right now, this is just an easy dollar cost average for anyone who is trying to, you know, build their position up in Meta. I don't think you have to think about it too hard. The volume has been relatively consistent as of late. There is constant inflows and outflows. There has been some big percentage moves with this stock. Any day you see a considerable red day, maybe throw a little bit of money at it if you are trying to build your personal position. I more than likely will do a similar thing quite soon, in all honesty. But I also like a lot of the big mega caps right now. I really like my Google. I really like Apple. I really like Amazon. We'll see what earnings look like for the rest of them. But anyway, guys, that is my video on Meta. I think we covered pretty much all of the big points. I've at least given my thoughts on what I am looking for with the company as of right now. If you watched all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here. From the bottom of my heart, your support does mean the world to me, and it feels damn good to be back making these videos for you all. If you did watch, please hit that like button, drop me a comment, subscribe. Again, it all genuinely helps me so much, and it does keep me really motivated. Anyway, guys, I'm going to see you for another video tomorrow. I hope you have a beautiful, blessed day. Peace.